Welcome. After nearly a year of trade policy uncertainty, the Supreme Court's ruling that recent tariffs are unconstitutional has reset the policy landscape. Yet, as is often the case in Washington, when one chapter closes, another opens. President Trump has already signaled a shift to an alternative legal framework for tariffs, and the markets are digesting what that means for trade policy, corporate earnings, consumer spending, interest rates, and tariff revenue, which we see in this chart here. The administration, of course, has been aware of the possibility of this ruling, and it's explored how tariffs could be passed without the International Emergency Economic Powers Act, commonly referred to as IEEPA. So, following the Supreme Court ruling, the administration quickly implemented tariffs under a different law, Section 122 of the Trade Act of 1974. Specifically, Section 122 allows the president to impose tariffs of up to 15% for a period of 150 days without requiring any congressional approval. This means that although some of the higher tariff rates introduced in 2025 may be rolled back or not last very long, tariffs are still likely to remain an active policy tool. And there are other areas of uncertainty, including if and how refunds will be made. Courts still need to determine whether businesses that paid tariffs under the IEEPA framework are entitled to refunds, and whether individual Americans could be included in any reimbursements. For investors, though, the most important takeaway may not be the legal ruling itself, but what the past year shows us in terms of the importance of staying invested. While markets can experience swings during periods of policy uncertainty, they can also stabilize and recover when investors expect it least, as they did last year. On April 2nd, 2025, the initial announcement included a baseline 10% tariff on virtually all trading partners, with higher country-specific rates layered on top. The immediate market reaction was sharp, resulting in a correction across major indices. Then, on April 9th, the administration announced a 90-day pause on the country-specific increases, leaving only the baseline rate in place, after which trade deals were made with individual countries and regions. The markets began to rebound almost immediately and then rose to new all-time highs in just months. Trade policy, legal battles, political debates are important for voters and taxpayers, but overweighting their importance can often lead to bad investment decision-making. That's why our job is to be hyper-rational at applying how the headlines as well as the fundamentals impact the market moving forward and impact how we position you to achieve your goals and objectives. Thanks for watching. Enjoy today.